Hello, and welcome back to another episode of Actually Intelligent. I'm Max Thone, your host, and today we're going to be breaking down some top news headlines from the past week because this week has been, well, a lot. If you've been following the news, you know what I mean. And if you haven't, strap in because we're going to cover three stories that, when you put them together, paint a picture of an industry at an inflection point. Here's what we're breaking down. First, OpenAI's $500 billion Stargate data center project, it stalled. A little more than a year after that big White House announcement, the joint venture has basically no staff, no facilities under construction, and the partners are fighting over who controls what. OpenAI is now scrambling for computing power wherever it can find it. Second, the Pentagon just gave Anthropic a Friday deadline. Drop your AI safety guardrails or face the consequences. Defense Secretary Pete Hegseth is threatening to invoke the Defense Production Act, the same law used during COVID to force companies to make ventilators. Despite this, Anthropic is not backing down. And third, a speculative research report called the 2028 Global Intelligence Crisis went viral this week and helped trigger a massive stock sell-off. The thesis: AI works exactly as well as the bulls expect. And that's precisely what breaks the economy. Three stories, one three line. The AI boom is shaking up everything we thought we understood about the business world. Let's get into it. Let's start with OpenAI because this story reveals just how messy the AI infrastructure race really is behind the scenes. You might remember January 2025, President Trump at the White House, flanked by Sam Altman, announcing the Stargate project, a $500 billion partnership between OpenAI, Oracle, and SoftBank to build massive AI data centers. 10 gigawatts of computing capacity, $100 billion right out of the gate. It was framed as America winning the AI race. So, what's actually happening? According to reporting from The Information this week, more than a year later, the Stargate joint venture has not staffed up. It's not developing any data centers, and the three partners can't agree on who does what. Let me repeat that. They announced a $500 billion project at the White House, and a year later, there's no teams, no facilities under construction, and the partners are gridlocked. At this rate, we'll see the Stargate TV series reboot before this project is finished. So what went wrong? We're seeing a few things. First, leadership disputes. In the weeks after the announcement, the three members, OpenAI, Oracle, and SoftBank, disagreed who would be in charge, how the partnership would be structured, and who would own what assets. Between September and October of last year, the Stargate team took multiple trips to Japan to try to work things out with the SoftBank's Masayoshi-san. It did not fully resolve the problems. Second, they're facing financing issues. OpenAI originally wanted to own its own data centers. It makes sense. You don't want to depend on third parties forever. But when they tried to raise debt to fund massive campuses, lenders are balked. Why? Because OpenAI is still a cash-burning company without a proven long-term business models. That's not something that banks love. Third, they lost their general contractor. The negotiations with Oracle put OpenAI's Texas campus project on hold for so long that its primary contractor walked away. This leads to several notable issues. So what is OpenAI doing now? They're scrambling. They signed new compute deals with AWS and Google Cloud to cover near-term shortages. They partnered with AMD and Cerebras for chips beyond NVIDIA. And in January, OpenAI announced a partnership with Cerebras to deploy 750 megawatts of low latency computing infrastructure. They're diversifying fast after this Stargate project seems to just be hung up on everything. But here's the bottom line. OpenAI missed its goal of contracting 10 gigawatts of capacity by the end of 2025. They've only got about 7.5 gigawatts. They've revised their projected compute spending from 2030 from $450 billion to $665 billion. The cost of these projects just continue to go through the roof. So what does this mean going forward? Really a few things. First, there's a massive gap between photo ops and execution. Building data center infrastructure is not a software problem. It requires power contracts, construction permits, real estate, supply chains, and all that takes years, not months. Second, OpenAI is now dependent on a patchwork of partners rather than a single integrated strategy. That adds another layer of complexity. Every additional vendor is another relationship to manage, another contract to negotiate. And third, and this in the bigger picture of things, the AI infrastructure build out is constrained by real world physics. You can't just come up with gigawatts of power and data center capacity and just put it somewhere. Elon Musk responded to these Stargate delays on X with those who have tried to do so at scale would understand. Say what you will about Elon, but I think when it comes to scaling something like this, he would understand just how difficult it really can be. The irony here is that while OpenAI is racing to secure compute, its competitors are catching up. Google, DeepMind, Anthropic, they've all rapidly increased their computing capacity. The Stargate delays could erode OpenAI's edge at exactly the wrong moment, especially as we're seeing AI really start to pick up and companies begin to find new ways to use it and actually implement tools into their everyday workflows. Speaking of Anthropic, let's talk about what's happening right now between them and the Department of Defense, because this is one of the most significant AI policy standoffs we've seen. And I don't think people are talking about it as much as we probably should be. It's kind of scary if I'm saying so myself. On Tuesday, Defense Secretary Pete Hegseth summoned Anthropic CEO Dario Amodei to the Pentagon. The message was clear. Give the US military unrestricted access to your AI model or face consequences. Hegseth gave the company until 5:01 p.m. this Friday to comply. If Anthropic doesn't agree to the Pentagon's terms, Hegseth said the government will either invoke the Defense Production Act, forcing Anthropic to provide its technology to the military, whether it wants to or not, or designate Anthropic as a supply chain risk. That supply chain risk designation is typically reserved for foreign adversaries. The closest precedent is the Huawei ban in 2019. If Anthropic gets that label, it would prohibit any company with military contracts from using Claude in their workflows. That could devastate Anthropic's enterprise business. So still, what's the actual dispute here? At its core, it's about guardrails. Anthropic has two red lines it says it won't cross. It won't allow its AI to be used for mass surveillance of American citizens, and it won't allow its AI to control weapons autonomously without human insight. Pretty important things, especially if you're someone like me who's worried about your privacy and the fear that AI really can cause when it comes to being used for military purposes. The Pentagon wants Anthropic to allow its model to be used for what it's calling all lawful purposes, essentially removing those restrictions that Anthropic has put in place and letting the government decide what's appropriate. Anthropic's position is that AI isn't reliable enough yet to operate weapons, and there are no laws or regulations covering how AI could be used in mass surveillance. They're not anti-military. Claude is actually the only large language model currently authorized on the Pentagon's classified networks. That's big. They have a $200 million defense contract. They're just drawing lines about specific use cases. Why is this becoming a big deal now? This really happened after the Venezuela operation that captured Nicolas Maduro in January. As a result of that, or coming out of it, there were reports that Anthropic products were used in the raid through their partnership with Palantir. An Anthropic official allegedly reached out to Palantir to ask questions about how Claude was used, and that was interpreted by some as disapproval. Anthropic denies that characterization. Amodei told Hegseth in Tuesday's meeting that they never raised concerns to Palantir or the Pentagon about the raid. and that their current safeguards haven't prevented the Defense Department from doing its work. But the administration has been looking for this fight. Some officials, including AI czar David Sachs, have publicly criticized Anthropic safety policies as woke AI. This matters for a few different reasons. First, Anthropic is the only frontier AI lab with the DoD access right now. If the Pentagon cancels this contract, they have no backup. A defense consultant actually told TechCrunch that the DoD has no backups. This is a single vendor situation. That's not something they're going to be able to fix overnight. That said, the Pentagon has reportedly reached a deal to use xAI's Grok in classified systems, and Google is close, but close isn't close enough in this case, nor does it mean done and ready. Second, this is a proxy battle for who controls AI's future. Is it the companies building these systems who might have concerns about safety and reliability? Or is it the government, which argues it should be able to use any technology for lawful purposes? Third, invoking the Defense Production Act against a domestic AI company would be unprecedented. The DPA was designed for wartime production, so forcing factories to make tanks and a set of cars. Using it to compel a software company to change its terms of service, that's a new legal territory. And what does that mean for you and me? I think it's still to be determined. So what happens by Friday? Anthropic has signaled it's not backing down. Reuters reports that Anthropic has no intention of easing their usage restrictions. This could end with a negotiated compromise, or it could end with the government trying to force Anthropic's hand, which would almost certainly trigger litigation. Either way, this is the kind of conflict that's going to define the relationship between AI companies and the government for years to come. And here's another ironic part about this. The safety-focused lab founded by former OpenAI researchers is now in a standoff at the Pentagon. You really can't make this stuff up. Like I said, AI is continuing to change the way that the business world operates and the way that we look at problems and solve them. And we really are going into new territories here. So now I want to talk about the third and final story. It's a little different because it's not about something that happened this week. It's about something that might happen. And the fact that enough people believed it to potentially happen meant that this story was able to move markets. So what's going on? On Sunday, a research firm called Citrini Research published a speculative essay on Substack called The 2028 Global Intelligence Crisis. It's written as a memo from the future, June 2028 to be exact, looking back at how AI broke the economy. The scenario goes something like this. AI works exactly as well as the bulls expect. Companies replace white-collar workers at scale. Those workers stop spending. Consumer demand collapses. A negative feedback loop accelerates until unemployment hits more than 10%, and the S&P 500 drops nearly 40% from its October 2026 highs. Again, speculative, but it's playing out a future where if what all the bulls are saying is right, we have reason to be concerned. The authors of this piece call this the ghost GDP, output that shows up in national accounts but never circulates through the real economy because machines don't buy groceries. Here's the wild part. This speculative fiction, as I've said and alluded to, it actually moved real markets. So on Monday, the Dow dropped over 800 points. Software stocks, payment companies, and business services got hammered. IBM fell nearly 12%, partly because Anthropic announced that same day that Claude can now automate COBOL modernization, threatening IBM's $30 billion annual legacy maintenance business. To kind of continue to compound this, Michael Burry, the big short guy, amplified the Citrini piece on X with, "And you think I'm bearish?" The Wall Street Journal pointed to the report as a key accelerant of investor anxiety. Discussion of it racked up roughly 16 million views on X. So is the thesis right? Look, the authors explicitly say this isn't a prediction. It's a thought exercise about tail risks, but the mechanisms they describe are worth taking seriously. The negative feedback loop logic is sound. AI improves, companies cut headcount, savings get reinvested in AI, displaced workers spend less, weaker demand pushes more companies to cut. Each individual decision is rational. The collective results could be destructive. They also point to real things happening now. For example, Indian IT stocks lost roughly $50 billion in market cap in February on AI disruption fears. Enterprise software companies are facing genuine pricing pressure. The frontier models are measurably getting better at longer, more complex tasks than they were only 6 months ago. That's something that we've been tracking really closely. Every month, it seems like AI is able to do something more and more and more than it used to be able to do. In fact, if you think back to when AI was first launched, I think it was 2023, it couldn't really do much without really strong prompts, without continuously fiddling with it. And while that's still there, its coding capabilities, its research capabilities, its ability to learn and save things so that it can continuously do the same operation over and over again have just grown astronomically. So there are some counter arguments to this paper and to this thinking. So Noah Smith, the economist and blogger, called it a scary bedtime story. And his point was that the scenario Citrini wrote about assumes that displaced wages permanently vanish from the economy, ignoring how productivity gains have historically reallocated value rather than destroy it. And when AI drives costs down, goods and services become cheaper, raising real purchasing power. Economic theory holds that freed up value gets redeployed into new industries, new forms of demand, and new behaviors we just can't model yet. Also, the scenario assumes that policy response is essentially nothing between now and 2028. No wage insurance, no expanded tax credits, no government intervention. That's a lot of work for an assumption to do. So here's what I take from this. First, the market is genuinely scared, not irrationally. There are real disruptions happening, but scared enough that speculative fiction can trigger a sell-off. That tells you something about the sentiment. Investors are scared. They don't really know where we're headed. They don't want to believe that it's a bubble. People want to tell them it's a bubble. They don't want to believe that it is something that's really going to take away jobs. AI bulls keep telling you it might. Investors are worried. They don't know really how to read the signs that the media, that these companies, that all of us are putting out. Second, the distribution question is becoming central. The Citrini piece isn't really about whether AI creates value. It assumes it does. The question is whether that value flows through the economy or concentrates at the top. I think from what we've seen in recent years, that value tends to concentrate itself at the top. The other hand of that is like, maybe there's a policy question that can support this. But in the meantime, it's not clear. It's not clear. Third, we're in a weird moment where the AI optimists and the AI pessimists are describing the same future with opposite emotional balances. AI becomes incredibly capable and replaces a lot of human work. It's either the best thing ever or a crisis, depending on who you ask and what happens to the people that are displaced. Let that sink in for a minute. And I think that goes back to the investment piece as well. This is either an incredibly amazing thing or an incredibly scary thing. It all kind of depends on where is the value being created and being driven. So let's bring it together and wrap this up. OpenAI can't build its data centers fast enough. Anthropic is in a standoff with the Pentagon over safety guardrails, and a speculative essay about AI breaking the economy helped trigger a market sell-off. 3 stories, 1 through line. These aren't hypothetical problems. They're happening now, this week, in real negotiations in real markets. The question isn't whether AI is transformative. It is. The question is whether we can navigate the transformation, build the infrastructure, set the boundaries, distribute the gains fast enough to avoid the worst outcomes. It's not guaranteed. It's going to require execution, policy, and some luck. But here's the thing. We're not in June 2028 yet. We're in February 2026. The negative feedback loops haven't started. The canary is still alive. That means there's still time to get this right. That's it. Thanks for listening to Actually Intelligent. If this resonated with you, or you think someone you know might find it interesting, share it with them, and we'll talk to you next time. Thanks for listening.